Well, we have Mike Zuzolo back to Connected Farmer, and he's going to comment about the Chinese imports of both grain and soy, and also about the South America weather impact for soy for commodities. Right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Mike, welcome back. It's been a while that we don't record anything, and today the markets have closed in green. Tell us a little bit about the today's trade, and then we will jump into the China issue.
You bet. And Luis, it's great to be connected with you again. South America weather has been a real boon and a real good feature to this market, especially for the row crops heading into the planted acreage intentions report and the grain stocks report a week from Friday. And I think it's been very surprising to the trade. I would certainly say that on my behalf, that Argentina and their excess wetness seemingly came out of nowhere to really hamper the crop in a very key time period. So much so that the Buenos Aires Grains Exchange earlier today, before we recorded this, came in and cut their corn estimate by 1.5 million tons, taking it down to 54 million tons. That takes you 2 million tons below USDA's latest update earlier this month on the WASDE report. And why I bring that up is because all year long we have been under the impression and heard, I have heard especially, the idea that even if Brazil's crops are hurt, in the case of corn, we have Argentina to come in and rescue it. And in the case of beans, we have Paraguay and Argentina to come in and rescue it as well, so that the net South American supply production is not going to be hampered or cut back much. I think the trade realizes that this is back on the table once again.
Yes, and since you mentioned South America, I think it's good to talk about the Brazilian soybean crop size. Several estimates differ a lot on this, and it seems that there won't be a significant delay, a further delay on the Brazilian harvest. What's your opinion on that? Who is right? The USDA is right? Who is
Yeah, I think that's an excellent question because I'm going to distinguish between the corn and the soybeans in Brazil, and I'm going to ask your opinion on this as well. But my assessment on soybeans for Brazil is that with two-thirds plus harvested at this point and very wet weather expected to come into Brazil through Argentina, but especially into center west Brazil, which is the major safrinha corn growing area for the country, for the whole production. I would assess that the soybean crop is fairly well made in Brazil, that it would be difficult for me to see it go much below 150 million metric tons. The 148 number that I want to say Safras maybe put out not too long ago, it might have been another private estimate, but I could see it dipping to 148, 149, but not too much below 150 with harvest already kind of in the bag, so to speak, unless these Brazilian storms really create some devastation. But I was thinking about our interview today, and I wanted to ask your view since you had done some weather analysis for me and gotten me some really good intelligence down there. In Mato Grosso, especially, I am looking at weather models that are suggesting 6 to 8, maybe 9 inches of rain over the next 14 days. My understanding is the safrinha corn is just freshly planted. Can that soil tolerate that kind of rainfall on new seed beds, or could we expect maybe some washouts and some lost acreage from flooding?
Well, I do think that there will be some lost acreage considering that volume of rain. And but coming back to the soybean harvest, I think that we could not go as low as 145 or even 142 that some private estimates mention this season.
Yeah, and I agree with that. And I think that it doesn't matter who's right or wrong. I think at this point, and this is what I've talked to clients about, and I hope your viewers kind of take a free trial of my analysis because I really think we're at a point where if the crop is that small, the Brazilian farmer should be really reacting to that, not selling as much, and the Porto Paranagua price should start to really scoot higher again. We went from about $400 a ton to about 430, and it seems like we've kind of peaked now. We've kind of tapered off and started to curl back down in terms of that pork price. So unless the Brazilian RIA really kicks into a stronger, higher gear against the US dollar, that Paranagua pork price should really tell us where this crop size is, because I think the Brazilian farmer would really start to pull back in terms of wanting to sell much, especially from what I'm hearing. Brazil and their agriculture been very hurt this past year, and there's a lot of suffering monetarily and financially in Brazilian farms right now.
Well, and shifting to the Chinese issue that we have mentioned at the opening, uh, s- uh, the talk about the Chinese economy has changed significantly over the last few years and months. People are talking about a shrinking population now and a lot of economic turmoil related to credit and mortgages. But still, for the consumption of corn and soybeans, there is still a record forecast. How do you assess that?
Yeah, and USDA, I think, has done a pretty good job of trying to thread the needle, so to speak, of adding 3 million metric tons to China's imports, but making it pretty clear that South America is going to garner most of that. And there is some data, the Chinese import data versus some of the other tracking export data that we have access to in the USDA. They talked about this in their oil crops outlook about a week or so ago, that those numbers don't match. And so they are adding more to the imports, but it's pretty clear at this point to me that the United States, are not going to really share in the benefit of that added 3 million metric tons of Chinese imports. And so that calls into question the agricultural outlook number of U.S. exports of soybeans going back up to 4.4 billion bushels, just about where we were back in 21, 22, before the pandemic hit. And I'm really wondering if we can really get that high in exports for the United States in this new marketing year. I think it's probably going to be closer to 4.2, maybe 4.25. And that kind of a number could distinguish between having closer to a 200 million bushel ending stocks number this coming fall in the United States, or closer to where we're at right now, closer to a 300 million bushel carryover. And if we're close to a 300 million bushel carryover, that would suggest to me that we have a pretty good likelihood of going back into towards the $10 level in the new crop November soybeans. So I'm very eager during this rally to let this market run. If we can get above, this is a great statistic too, Luis. The 20-week moving average in soybeans on a weekly continuation chart for soy, that 20-week moving average was tested today. That's going to be at about 1230 lead month futures. I went back and looked. We have not closed above that on a weekly basis since late July of last year. So if we could get above that, I think that would maybe uncover some fresh momentum buying, more short covering of the funds. Maybe then we could go after that gap in the charts in the November futures sitting up around 1240 area. So I'd really want to be a hedger at that price level though, because I'm very nervous about that Chinese demand as it relates to the United States.
Well, as you cited, the U.S. exports, what will be the impact for the U.S. corn and soybean farmer if the Federal Reserve really decides to raise interest rates by June?
I don't think they will want to do that. We're in an election year, and Jerome Powell, the Fed chairman, just said yesterday they want to do 3 rate cuts. And that was a very big surprise because the inflation number was higher by most metrics than what the trade was thinking. So that higher for longer term that we've been talking about, the Fed, I think, is embracing higher inflation for longer. And I think that they are willing to do that because they do want to cut rates. I personally feel like the United States is a lot closer to a recession than we realize, and that the stock market moves and the profitability in these major companies being near records, it's kind of masking what's happening underneath in the real economy. So I think the Fed's probably going to do their 3 rate cuts at this stage. And so, in that sense, I'm not real nervous about the Fed. I would say since the last time you and I talked a while back, I was starting to get more nervous, I think, about the Chinese economy. I'm less nervous about the Chinese economy. I'm less nervous about the Federal Reserve hurting commodities, but I'm much more concerned about the US China trade relationship in this election year, especially with news like today, where it was reported the Houthi rebels will now allow Russian and Chinese ships through the Red Sea. So they are picking favorites now in terms of who they are siding with, they being the Houthis. And so that kind of gives you, kind of spells out that US ag exports are still going to have trouble, whether it's Russia or whether it's because of terrorist attacks in one of the biggest shipping lanes in the world.
Well, and we always like to end with some comments about livestock. So in the United States, the cattle herds have been low for a very long time, and we don't see any light at the end of the tunnel because we I just learned about some fires in the western part of Texas, and there is many other aspects to consider. What do you think about this situation with the U.S. cattle herd?
Yeah, the most price negative feature to this market right now is the currency and the potential for increasing imports, just like in 2014, 2015. The weekly export sales today kind of point to that. We had a marketing year low for beef at around 11,000 metric tons. So that's the most negative feature. The most price positive feature is what you just said, the supply of US cattle, the supply of US beef going down. I think Friday's cattle on feed report and the placements number being a pretty aggressive number, I'm skeptical we can get that high in placements because of this tighter supply. So what I'm trying to line up in my mind at this point, excuse me, we have lower placements in the cattle on feed report than the estimates suggest. We take feeder cattle and fat cattle above those September of last year's highs, those record highs from last year. We take it above those levels on a weekly close. That maybe opens the door up to another leg up. That's the leg I would really want to get hedges in place. So I'd be looking at cattle much like the soybeans, relatively tight supply, but very nervous about the demand side.
Your final thoughts about the commodity markets?
I think this next, I just sat down with 2 new clients here in the office this afternoon. We are all nervous in agriculture about getting another rally to be able to hedge for profit. I think we can do it. I think it's going to probably have to be in the next 30 to 40 days, though, thanks to South America and hopefully thanks to maybe the dollar starting to taper off after the Fed meeting. If we can get that, I think hedging for profit is absolutely the right thing to do. We can always cover ourselves on the upside if we see the need to, but I would recommend starting with beans. And then if we can get up to that 520, 530 level in the December corn futures, really want to start getting hedged there as well and lock in that profit.
Thank you very much, Mike.
Nice to be back with you, Louise. Thanks for having me.